almost in every industry, across every sector, Africa is seeing a much faster rate of acceleration in the last 3 or 4 years than it's ever seen before.
On this week's episode of the Silicon Valley Podcast, we sit down with Mark Kleyner. He is the co-founder of Dream VC, an entrepreneur, ecosystem builder, and early-stage investor in emerging markets. Mark has worked within VCs in the UK, US, Europe, and Africa, and actively advises, coaches, and mentors several very early-stage West and East African startups. On today's show, we talk about Dream VC and the mission statement and what mission are they on, the current investment landscape in Africa and some of the key trends shaping it, the role of diaspora investment in driving economic development and entrepreneurship in Africa, the unique opportunities that investors can find in African markets compared to other regions, how necessary is local knowledge and partnerships when investing in African markets, and much more. And we have a special for this show where we actually have a live audience that asks some questions at the end of the episode. So stay for the entire time. Enjoy. I know you're going to get a lot out of it. This is an amazing episode. All right, now let's begin this week's episode of the Silicon Valley Podcast. Enjoy.
All right, I'm super excited for this week's episode of the Silicon Valley Podcast. Now we're trying something new here. We have a live audience. It's not exactly a live studio audience. It's a live virtual audience, but we're all here because, well, we're pretty excited with what our guest this week, Mark, is doing. And, well, I thought, what better way to bring in some of our audience to have a Q&A at the end of it. Not sure if the Q&A part will be released, but for the audience out there in the future, if you're excited and want to join us for one of these, please email me, connect with me on LinkedIn. We'll add you to the list. This is something that we could continue to do in the future. With that, Mark, let's just dive into the interview. Can you give us a brief background of your career up until this point?
And definitely a pleasure to be here, Sean. Thank you for having me on. I think it's been a little bit of a zigzag career so far. So actually, originally by background, I'm from Eastern Europe, but I studied up in Edinburgh in Scotland. So I went to Scotland somewhere familiar and cold to finish my studies, moved from there straight into consulting, jumped ship a couple of times across several consulting houses, moving from the MBB to moving in a more boutique environment. Ended up in digital transformation consulting, I think quite a few years before this became mainstream and cool. Back then, certainly wasn't. And moved from that into consulting several startups. Realized that it seemed like our clients were doing something much more exciting than my team was. So jumped ship once again. Moved into one of our clients who were actually working on a pretty big project in Singapore and ended up falling into essentially what later I'd come to know is venture building. I moved between wearing a growth hat, an operator hat, and a business developer hat and realized that I really liked the adrenaline of working with startups. But what I didn't really understand was perhaps the other side of the game. Never really understood what the buy side was, never really understood what angel investors were, what venture capital was, hadn't really had any experience in that domain. So once an opportunity came up to perhaps turn the tables a bit and sit on the other side of the table, really took it with both hands, moved between working in consumer-focused venture capital funds, deep tech-focused venture capital funds, and even a very brief stunt in the Valley as well, working for an AI and medical devices-focused fund before realizing that perhaps my calling wasn't very much in the domain that far outside of my areas of expertise and something that I understood much more, logistics, e-commerce, marketplaces, and more perhaps tangible and easily relatable sectors were sectors that I could see myself investing in. Now, I had the benefit, or I guess the privilege of witnessing something for the first time as someone growing up in Moscow in Russia. I got to see how a country went from essentially, taking on tech for the first time, the first e-commerce platform, the first marketplace, the first last mile logistics company. And the exclusive thing is I got to experience that again because I ended up working in West Africa. And West Africa in the 2010s was going through exactly the same process. The first logistics company, the first e-commerce company, the first marketplace. So I saw a lot of similarities. I realized that perhaps the macro headwinds were even larger and there were a lot more positive things to see in terms of investing, building, and perhaps creating value across various African countries as compared to Eastern Europe and other parts of the developing world. And I guess I just really found my footing there. Found a lot of people I really enjoyed working with. There were a couple of amazing teams building some crazy things for the first ever time in that ecosystem. And I realized that I loved working in that environment. So I haven't really looked back since. And then in the middle of COVID, in between taking on a venture building hat and a venture capital hat, periodically one on, one off, I ended up actually setting up my own company called Dream VC, where we realized that there was a little bit of a gap in between the investment side and this founder side. And really that gap, in our opinion, wasn't necessarily something around transactions, advisory, or anything about incubation. It was actually about unlocking more money to go to the VC ecosystem. And that's what Dream VC is really all about. It's about making VC bigger, but from within an emerging market. And I'm sure we'll get to talk a little bit about that more as the conversation goes on.
So speaking of Dream VC, can you talk a little bit more about the investment landscape in Africa and some key trends that are shaping it?
Sure. Well, I mean, I think it's useful to understand kind of where Dream VC comes in that picture, right? So Dream VC isn't, despite the name, someone's Dream VC fund. Maybe it warrants for a change of name. In fact, it's more so akin to an investor accelerator. So rather than necessarily supporting startups to go from point A to point B, we support investors to go from point A to point B. Maybe that's why in the media in many parts of Africa, we've come to be known as an African Venture Capital Institute. Because to a large extent, we actually help investors to grow their careers, to build funds, to deploy those funds, and to launch funds that are Africa-focused, but that look like, feel like, and act like a global fund. They are equally competitive to global funds. They're staffed like global funds. They perform like global funds, and sometimes even better. And I'll explain why this needs to happen. And this comes into your point on trends. So at the moment, the African venture capital landscape is very interesting in the sense that it's the youngest venture capital ecosystem in the world. Now, this isn't entirely surprising. Africa is also the youngest continent in the world, the last continent in the world to get 5G, the last continent in the world to adopt AI. And yet, despite all of these things, it's one of the continents where you see the fastest adoption of technology today. The fastest continent to adopt AI, the fastest continent to adopt 5G, the fastest continent to go through digitization. So what's going on? Well, I mentioned these macro headwinds. So on one hand, the continent of Africa, it's really 54 different countries, potentially 1,000 different ethnic groups. But broadly speaking, across all of these 54 different countries, you're seeing a massive wave where we're seeing an emergence of a middle class that never really existed on the continent before on a large scale, something that can only be really compared to the growth of the Indian ecosystem in the early 21st century or the growth of the Chinese ecosystem at the end of the 20th. We're seeing a really majority young population that is digitally savvy, quite comfortable with software engineering, product development, and digital adoption, and that wants to work in the technology space first before any other sector. And we're seeing a more interconnected world into which this population is emerging as compared to any other emerging market before. Whereas China still faced global geopolitical tension when it started to enter into the global scene and when markets opened up in the 1970s. And India faced a largely homogenous world dominated perhaps by the presence of the US in the early 2000s, where you actually look at the African continent entering the global agenda now, becoming a permanent member of the G20, starting to be involved in global discussions. It's completely different in the sense that a lot of the nationalistic challenges that existed don't really exist before. Someone can be based in Tunisia, work on a project in Silicon Valley, and have a client in China, and that's perfectly fine. So with that in mind, we've seen a lot more of these remote first businesses or businesses that are local in Africa, serving a global need and scaling as a global company very, very quickly. Now, if I had to break it down into the core trends that are really going on, core things you need to understand is that almost in every industry, across every sector, Africa is seeing a much faster rate of acceleration in the last 3 or 4 years than it's ever seen before. Take venture capital as a whole asset class, for example. We look at the last 10 or so years, maybe $20 billion invested across the entire continent. 20 billion seems like a lot, but when you think about it in context, that's less than California might receive as a state in terms of full venture capital financing in a given year. But this is going to a continent of 1.4 billion people across 10 years. Now you look at the previous 50 years before that, not even $500 million. So the 20 billion in the last 10 years, more than ever received before. And from these 20 billion, 70% came in the last 3 years alone. That should show you the rate of acceleration of venture capital funding. Now, venture capital is just a proxy. So in reality, what stands behind that is an amazing increase in the number of incubators, construction of new private and public universities all across the continent, a lot more corporates moving into the innovation space, and many of these African markets where it used to be very difficult to do business, becoming much more globalized, becoming much more connected with the rest of the world and attracting people to come to Africa, not from an exploitative sense or to work on raw minerals, but actually to relocate and build a business, open up business divisions there. So I think that globalization trend is definitely something that we're seeing, but it's quite interesting that technology is at the forefront of that rather than perhaps geopolitics, rather than perhaps the discovery of oil or anything else. It's that tech sector and the advantage from a demographic base that you have continent of 1.4 billion people, where the average age is 19, and the average person grows up with a mobile phone, a smartphone, and a thought process that I want to be an engineer before thinking that I want to be a banker or a consultant or a lawyer. So I think that's definitely the biggest thing on a macro level. But we can dive deeper into any specific trends if you're interested.
Well, you just mentioned geopolitical, but I'm kind of curious, how does the political stability and regulatory environments impact investment decisions in Africa?
I mean, it plays a key role. I think the biggest thing that usually the typical mantra is that Africa is still a collection of countries that have very little in common with each other. Ethnicities are different, languages are different, ways of doing business are different. To a large extent, being based in Morocco, where I'm taking a call from right now, and being based in neighborhood Tunisia, or for example, in Algeria or in Egypt, these countries, even though they might share a history, don't necessarily share a way of doing business, don't necessarily share a language of doing business, and don't necessarily even share top sector growth. Almost each African country, by nature of it being a capital scarce ecosystem, is emerging as a hub of a very particular focus. It's emerging as a hub of a very particular trend. So yes, you do see geopolitics influencing decisions in the sense that it's obviously risky to do business in Africa because stability of governments is still not as stable as you see in Europe. It's still not as perhaps as democratic as you see in the US. But on the flip side, partially because of some of these environments existing in a more, I'd say, politically stagnant environment, the private sector has stepped up to actually solve most of society's challenges. The top universities are all private. The top incubation facilities are all private. A lot of the startup acts that have actually come across that help to reduce capital gains tax, incentivize innovation, they're all led from within the private sector, pushing the public sector to do this. So we're not seeing a top-down approach from government, as perhaps we saw in Singapore or in Israel or in Estonia back in the day, to actually create a startup environment. We're seeing the private sector survive and thrive despite the fact that government isn't always adapting or always creating a supporting environment. And then often governments actually falling into lockstep by thinking, if this is what the private sector wants, this is what we will do. So perhaps that does speak a little bit to the, I wouldn't say naiveness, but definitely youth of the governments in many African countries in actually dealing with innovation, dealing with economic friendly policies, dealing with a business friendly environment. But the risks that you bear that perhaps people think of, like a coup or a change of government or a civil war, are definitely few and far in between. And they don't affect the vast majority of the 54 African countries.
With that, you'd mentioned the private sector. I'm kind of curious about the diaspora investments and how that's driving the development in the entrepreneur African ecosystem.
There's a saying that if African diaspora were one nation, it would be the 10th biggest country in the world. There's about 150 million people of African descent that are not in Africa today. And this group of 150 million people essentially sends back $50 billion worth of financial transactions to the continent every single year. So in theory, this economic block of individuals who were African, identify as African, see themselves as African, but are located in Britain, in France, in Belgium, in Germany, in the US, in Canada, in Mexico, in China, all over the world, actually plays a very important role. Number one, they create a lot of the liquidity in the market. The guy is actually paying for the construction of real estate, paying for purchases and sale of land, paying for the stock exchanges, paying for brokerage fees, paying for the public stock exchange. That's mostly driven by diaspora. That's number one. Number two, it's the diaspora that has ultimately been one of the biggest triggers in this last 10-year period of this adoption of technology. Yes, there has all the factors I mentioned on a macro level are definitely there. It's definitely much more feasible to be a software engineer. A lot more people are actually interested in this domain. A lot more people are considering technology. But If you look at the 7 unicorns you have, and there's really only 7 businesses right now in Africa who are technology first businesses that are worth $1 billion or more, each of these 7 businesses had either at least one diaspora co-founder or one foreign co-founder alongside the domestic African team. It's that combination of international experience or international exposure combined with domestic market know-how that actually allows a business to scale faster than their competitors. So the diaspora's role is almost unquestionable. Source of funds, catalytic source of funds, connections and know-how and knowledge exchange, but also sometimes the actual ability to come in and use that experience, that time, maybe in New York or in Chicago or somewhere else, to then take that mindset, combine it with, say, a scrappy mindset in Lagos or in Cairo or in Kigali, and build something on the ground that works both locally, but can also be sold and scaled globally.
Now, you'd mentioned mindset there. I'm curious about kind of what's the biggest surprise when you've talked to people from Silicon Valley about Africa, the startup ecosystem, or what someone from here might be shocked to find out or to learn?
I think perhaps it's that because of the rate of growth of technology adoption, something that usually takes 20 to 30 years to convince people to believe in has been taking on average 5 to 7 years. What do I mean by that? E-commerce took at least 1 or 2 generations to really pick up in Europe. People were not comfortable with the idea of falling away from the shopper experience, the in-person shop. You still see that a large majority of European society still go to in-person retail shop, still buy products in person. And to a large extent, the US moved faster, but still not as fast as perhaps China or Japan or Korea in adopting e-commerce. Now, what you see in African markets is in 2010, there was practically no e-commerce. But then now, jump forward really less than 1 generation. It's not even been 20 years since 2010. And pretty much every single African country has at least some e-commerce startups that are becoming mainstream. In fact, the first unicorn that came out of the African tech ecosystem wasn't a company that you would imagine like an energy company or an industrials company or a manufacturing company, something you would think is like the base industry upon which you build economic development. It was an e-commerce company that essentially came to market and built up that consumer behavior. You know, you look at the US, you look at France, at Spain, most developed economies, they're driven by consumer consumption. It's one of the biggest contributors to GDP. But then you look at emerging economies and they're mostly driven by exports or extractive industries. And that transition to consumer consumption takes generations. But in Africa, it's taking really 1 generation. And what's been shocking is, you know, yesterday, I was at a deep tech summit. Some parts of the world still don't actually have an established deep tech community. It's a complicated sector. Not everybody is comfortable investing in it. But what was being discussed yesterday in Morocco, a country that for most people you would think of is, you know, maybe a birth of mathematics, maybe some nice cultural monuments, maybe a mosque. You don't necessarily think of this as a hub of deep tech innovation. And yet, in the middle of the desert, you have an enormous deep tech university. You have irrigation and agricultural companies investing hundreds of millions of dollars into solar research, irrigation research, agricultural research, thinking about applications of treatments of water and land and making a non-arable territory into arable territory. These are quite complicated and nuanced topics, right? And this is arguably perhaps 3-4 steps later than just rudimentary tech investments. And yet this is becoming mainstream because deep tech came and now it's become mainstream in less than 2 or 3 years in Africa simply because tech adoption is so fast. So on one hand, when people think about Africa and they see that in some parts of the continent, people still don't have regular access to electricity, still don't have regular access to water, still are struggling to get job stability. That's true. But on the other hand, you can also have on the very same continent enormous conferences with predominantly African professionals building some crazy innovations and selling it to Germany, to China, to the US as, you know, breakneck innovation development. So I think what people are shocked by is the two can coexist. You can have both of these things. And that's largely because a portion of society is moving very, very quickly. And the rest of the continent is starting to catch up. But of course, it will take time before the entire African population is connected to the internet, before everyone has equal access to resources, and before you start to see economic development on a, you know, billion-person scale.
It's really interesting what you're saying there about all these deep pockets of tech. I'm kind of curious if there was someone overseas, someone from Silicon Valley, if they were to hear about this and get very excited and say they wanted to raise a fund, they wanted to invest, how important would it be to have local knowledge, local partnership when they went to these African hubs to invest?
I would say it's very important. I think to be honest, it was one of the main reasons why we set up Dream VC. So what we recognize is that a lot of people have a certain perception of risk. They have a perception of Africa that realistically will not change unless they have their own feet on the ground or someone they trust on the ground telling them a different narrative. If you don't have regular access to instant news, something that is taken for granted in any part of the US, any part of Canada, any part of Europe, if you can't get instant, available, accurate information, you realistically will have a bias about doing business in that market. If you're reading the news and you're thinking this news might be out of date, or this might be propaganda, or I might not actually trust what I'm reading, would you be comfortable putting your money into something? Usually not. And what we recognize is that the majority of the first generation of African funds actually had a lot of their teams based outside of Africa. You might have a team of 4 or 5 people, 3 being based in France, 3 being based in the UK, 3 being based in the US, East Coast or West Coast. But then when you have just one person covering 54 nations, covering 10 different sectors, to what extent can they actually have a realistic perspective of things? Very difficult. So to a large extent, that's why we built Dream VC, to create a labor pool of people, especially those based on the continent who understand VC, can be VC experts on the ground, and can be the mirror necessary for a foreign fund to actually build an African office. So don't just have an African desk sitting in, for example, San Jose or San Diego. Have someone physically based in Lagos in Nigeria, based in Nairobi in Kenya, based in Cape Town in South Africa, and Kigali in Rwanda, and Tunis in Tunisia, who is actually covering those markets from within those markets, because you start to see that those pockets of innovation that I mentioned. The funny thing is that because things are moving so quickly, even within the African VC space itself, people aren't able to keep tabs on everything, right? I know almost all of the most active investors in Africa, and they're constantly on the move. They're on the move more than my European peers. They're traveling 30, 40, 50 times a year. The continent is so big and there's so much to cover. There's so much going on in every single different country that you have to consistently be on the move somewhere there or here or there. And realistically, that would just be logistically difficult if you imagine flying in from SFO every single time.
Going back to what you said about the foundation of Dream VC, I'm wondering if you could expand on it just a little bit, kind of the impact it's had, kind of the network, a little bit more about that before, because I also really want to dive into how do investors there analyze opportunities and their scalability, their business models, from and how they expand into new markets in Africa and outside of Africa. So I'd like to take the conversation a little bit that way, but before getting there, let's expand on Dream VC.
Sure. I mean, for us, I think Dream VC was really the innovation of necessity rather than the innovation of something that we thought was going to be a good financial opportunity. Now it's profitable. It's running very well. We're very happy with it. My entire team are working on this as their full-time initiative. But initially, it was set up as something that we saw as a gap in the VC space. Why? On one hand, you have a lot of African working professionals that actually could be great operator investors. A lot of people with business development experience, operations experience, marketing experience, product experience, who have absolutely no connection to the VC space and don't even know that the venture capital industry exists because it's such a small part of the economy in Africa at the moment. So you have a lot of people who could be investors who aren't investors. At the same time, you have a lot of international funds that are consistently falling into these pits I mentioned. It's very expensive to fly to Africa. It's very expensive to fly between African countries. There's no established mass tourism, and it's difficult to set up local boots on the ground or set up a local office if you don't know the local nuances. Who should you know? What does the regulator do? What's the culture of doing business in this particular ecosystem? So on one hand, you had an international audience that wanted to break in, but didn't have the ability to find that talent on the ground. On the other hand, you have a very large talent base that doesn't even know that they are a talent base that could be fantastic for this industry. So that was number one. Number two, I actually saw quite a few of the African funds that were built by former operators from this first generation of African tech businesses going to the US, going to the UK, and really struggling to raise. You saw guys who had built 1 unicorn, 2 unicorns, $100 million businesses, going to the UK and saying, I can build another $100 million business, and people saying this was entirely luck because there's no precedent. The fact that you've built this $100 million e-commerce company for the first time in Nigeria, which was their blood, sweat, and tears, 1,000 people working really hard on this, really obviously trial and experimentation. To other people sounded like, well, this was a nice story, but claim your winnings while it works and then leave the space. Why would you try to do this again? Right? That was the feedback a lot of the first generation investors got. I mean, obviously, we can talk about racism. There is obviously a factor of that. You can talk about the fact that it's a very challenging market. You can talk about how perceptions in Africa are still influenced by what you might see on BBC or Channel One, or, for example, something like CNN. It will obviously talk about the most extreme news, because who would talk about the announcement of a new university program when you can talk about the war in Sudan, right? But that being said, I think there's definitely a positive trend there. And what we recognized is that people weren't really connecting those two dots. So what we started with initially was we went to the VC space, the local VCs, and we said, can we collaborate together and build something that would allow people to pipeline into VC? And their feedback was, that's a great idea. We don't have time. We don't have money. And no one wants to give us money. So we're spending 300 days a year fundraising. So if someone else built this would be really great. But right now, not a priority. We then went to those individuals who we thought could be great in VC, and we said, would you want to work in VC? And they said, yes, but I'm not American. I've never invested before. I don't have money for an MBA or going to study in HEC or LBS or GSB. Surely that's the only way to become a VC, because you look online and it looks mostly like MBAs from Stanford or Harvard or Yale or something else. So both groups felt that there was something missing, but they didn't want to take that step. So what we initially did is we looked at how did people access the venture capital space, especially individuals of diverse backgrounds in Europe and the US. And we struck on the idea of fellowship programs. Fellowship programs really kind of stemming from that first Sequoia Scout program and those individual funds that started to help enable individuals to break into the VC space from the background of a doctor, an engineer, a working professional. Those really have existed at least for about 10 years now in the American VC space, at least about 6 or 7 years in the European VC space. In Africa at the time, not a single VC fellowship. In fact, almost no fellowships at all, except for science-based or medical-based ones. So we started with a fellowship initially. Why? To train young professionals to have that network, to be able to connect to each other. If they can't fly around or they don't have that network, well, connect a very passionate Kenyan operator to a Rwandan one, to a Nigerian one, to an Ivorian one, to an Egyptian one, to a South African one. And suddenly that person has the social capital of 5 different people in 5 different ecosystems connected to maybe 100 operators each. Suddenly each of these individuals is more connected than a typical fund manager sitting abroad. Then bring in a combination of international experience investing in businesses, but also experience from other difficult emerging markets. We brought people who had experience investing in Latin America, investing in Eastern Europe, investing in Southeast Asia, investing in India, investing in the Middle East, not necessarily European VCs or even North American VCs, to talk about how do you invest in these markets, because the parallels were much closer. And then built on those experiences, we then created a custom experience of how do you invest in African markets? What should you know? Who should you not offend? How do you invest in countries where you have to be Sharia compliant? How do you invest in countries where there's some cultural factors that prevent you, for example, using equity or debt instruments in a particular way? How do you build in markets where you have to be both a venture builder and a venture fund before you can be a private equity guy, for example? These kind of things, we had to largely build them from scratch, but definitely influenced on learnings from other emerging markets. And that was the start of VC. But now, once we did that, once we created a labor pool, then actually we very quickly filled in those gaps of international funds being able to open funds on the ground. But then they came back to us with feedback and said, well, this is great. We can hire all our analysts and associates, but we need someone more experienced to head up these fund teams. We want someone launching accelerators and studios and corporate innovation units. And who's going to do that? Is it going to be the guy who's had 20 years of telecoms experience but has never worked in a startup? Or is it going to be these guys who have just started working in startups who you're going to thrust into the position of authority? So then we realized, well, beyond just training a young pipeline, you also need to train senior professionals who have the network and the capital and the connections to do something, but don't understand how to use that network. So that became our senior program, to train the senior professionals. And then once the senior professionals started launching funds, setting up funds and investing, then we had a corporate audience that started coming to us, banks and those same telcos and insurance firms saying, well, we're seeing this whole rise of VC. VC sounds exciting. How do we do this? Do we just hire a bunch of people from your programs? And then we said, well, again, it's a little bit more complicated because you can hire a couple of great VCs, but if you still think that VC is one thing and you have a completely different understanding of innovation, the corporate VC fund or the corporate innovation play will inevitably fail. If they think that they will expect a dividend from it, if they think that every investment will be strategic, if they think that every innovation has to be captured by the corporate, it's still a little bit of an older mentality. So then we said, well, if that's the barrier, that's the gap, let's build a CVC or a corporate innovation program. So now where we are today is we have this junior program that essentially mints young professionals so that people can actually hire in the space. We have a senior program that creates the ecosystem builders that are now pushing for startup acts, joining innovation departments and governments, setting up funds of their own, becoming the principals, heads of investments, heads of portfolio and whatnot in many of these Africa-focused funds. And then we're building CVCs from within the corporates, not bringing in international experts, but actually training someone with 20 years experience in Botswana to run a Botswana-based investment fund. They, of course, would have the connections and the ability to accomplish something. They just don't understand what they're supposed to be doing. So once you explain to them, you give them the context of why you're doing private equity, why you're doing venture capital, what is the desired return, how do you actually work with a VC before you, a PE fund after you, how do you work with the public markets and the private markets? Quite often, they're actually quite successful on their own. That's why, to an extent, it's really a infrastructure thing we're doing. We're almost in the human infrastructure business, more so than the education business, because we build the knowledge capital they need, but mostly we build the social capital, that networking, that connection piece that has never really been there in Africa before, where someone who comes to our network and they might be in a Francophone part of Africa, a French-speaking one, someone else comes from an Arabic-speaking part of the African continent, someone else comes from an English-speaking part, and someone comes from the diaspora. And 3 months later, these people who have never interacted with each other, who would never otherwise meet, might be building something amazing together, like maybe the next unicorn company, right? So to an extent, that whole scenario, that's a solution or the result of the Dream VC kind of keychain process of building these educational gaps and then allowing us to capitalize on investment space. That answers hopefully the VC part.
Can you share a story of a success, or share a story with us?
Yeah, I mean, I think I'll pick maybe 3 different ones and I'll go quickly on these. Number one that really stands out to me is this individual I met in DC recently, actually. He was one of our first ever trainees. He comes from a very, very poor region of Nigeria. Almost no economic opportunities there, no stable job opportunities. Even within Nigeria, you would mostly have to emigrate from there to a bigger city to get a city job. Skip 2 years forward, the guy's working in the private wealth department of the World Bank in DC with an amazing career, his own property, his own house. How did that happen? To a large extent, it happened because he was an amazing student, not just of ours, but in school, in his master's program, in just being a great academic individual in general. But also he was someone who made 100% the most of that social capital piece. He joined the program. He connected with a lot of people outside of his domain, outside of his networks, outside of any people he would actually be able to meet necessarily in day-to-day life. And he used them to find out about opportunities, to connect into other circles, to break into social classes that normally would not even look at a guy like him. He used that in turn and combined that with his hard rigor to essentially break into conversations, to speak with individuals in private wealth, speak with individuals in asset management, and then demonstrate that actually by being placed in this part of the world that none of them knew anything about, he was actually uniquely able to identify the challenges of impact investing in North Nigeria, uniquely able to identify the gender imbalances of investing in an Islamic majority country, the unique challenges of investing in this market and still being open to the Western part of the world. And so when he joined the World Bank, to a large extent, he built his career from scratch, but he leveraged both his own expertise for that and the program and the training and that forced immersion of internationalization to really make the most for himself. So that's something that, made me feel really great because we had somewhat lost touch with the guy, and then seeing him in DC, seeing him do really well and just being really grateful for how he managed to do everything kind of mostly of his own volition, but leveraging the platform as it's intended was fantastic. I think another case that really stands to mind is this lady that came to us in Tunisia. Tunisia 10, 15 years ago was a dictatorship. It was a country that wasn't on anybody's radar for tech or innovation or startup funding. In fact, I think on average, there was 1 startup or less per year that would get any form of angel funding or VC funding. Now, skip forward to 2024, and the 2 biggest exits in the last 12 months across the entire African continent came from a tiny country of 10 million people, Tunisia. And the sectors they were in were biotech and AI. Again, what? 10 million person country in an Arab majority world, you don't think of biotech and AI as the two sectors that are going to come out of this. But largely, a large part of the success of these companies and the success of the Tunisian ecosystem and the success of the Tunisian story comes back to a couple of particular people. And one of them happened to be one of our alumni. This individual, she actually was a force of nature of some sort. She was given a relatively weak mandate to try and build out the innovation ecosystem by learning from Estonia, learning from Singapore, learning from Italy, learning from Israel, and how do you build a conducive environment for startups to thrive. Now, when you get a mandate like that, you have some people that go in government, get rich, leave government, and nothing is done after they're there. But on her end, not only did she stay for much longer than she needed to for this job, she actually traveled to each of these countries. She brought experts from all of those countries into Tunisia. She helped to structure the first legal bill that actually made the Startup Act a legal act in the Tunisian constitution. They collaborated so much with other African countries that they actually initiated a process where other countries that had never dealt before with Tunisia now replicate the Tunisian Startup Act and use it as a template to build their own startup-friendly policies. They helped to incubate about 600 startups. So going from one or two that would get any kind of funding to several hundreds of them. They created multiple engineering schools, and they specifically focused on building out a particular niche, recognizing that maybe for a resource-scarce economy like Tunisia, what their advantage was the geography, the proximity to the Middle East on the eastern side, Europe on the northern side, the language. It's one of the few countries in the world where both English, Arabic, and French are the spoken languages. So you have an advantage of connecting to 3 different parts of the world, unlike most of Europe or most of Africa, the rest of the African continent. And recognizing that quite a lot of people were very, very fond of STEM. It was naturally part of the core education in the curriculum. So going from STEM to engineering and engineering to AI engineering was not a really big shift. But now what you see is that actually per 100,000 people, Tunisia graduates more AI engineers than any other country in the world. You have the highest number of people graduating specifically into being engineers with the expertise in large language models, engineers with expertise in big data. And these guys are usually, by nature of being based in Tunisia, requiring a salary that's 10 times lower than Silicon Valley, maybe 7 or 8 times lower than New York, and still substantially lower even than parts of Asia that used to be the capitals for outsourcing tech development. So suddenly you have someone on the quality of, a US engineer, but asking for a salary of essentially an outsourced stuff. So what do you see as a result? Well, as a result, in just the last 2-3 years, a lot of major European manufacturing companies are now outsourcing all their operations that used to go to China, used to go to India, used to go to Bangladesh. Now it's going to Tunisia. It's nearshoring, much closer, much more geopolitically close, much more feasible to check on what's actually going on, cost effective, and the quality is arguably higher. And these two businesses that were major exits were direct examples of them benefiting from this increased, appreciation of what's going on in Tunisia. In fact, the biggest one, this company called InstaDeep, was acquired by Pfizer-BioNTech, the guys who pulled one of the vaccines out during the COVID era. And what they were doing was largely essentially using AI to predict the potential of how you adapt to another pandemic. Very, very relevant technology in today's day and quite nuanced and complicated, but built by 2 guys with a laptop, former engineers who happened to come back, by the way, Diaspora, from studying in France to then coming to Tunisia, building on this engineering ecosystem, using the engineering talent to build something out. So a lot of these fascinating stories all around the place. And for us, it was just really cool that one of the key architects of this whole process in Tunisia happened to be an alumni. But again, just like in the earlier example, let's say 99% of what she accomplished was on her. But perhaps if DreamVC helped to globalize or give them the necessary resources to take that a step further, that's something that we're really happy to do because it's, like an immediate multiplier. This person puts in so much work, but then we put in a little work and their work goes twice as far. And then it's just very satisfying to see that.
All right, Mark, we're about to wrap up and then open it up for Q&A from the live virtual audience. If anyone wants to find out more about DreamVC, what you're working on, what's the best way to go about doing that?
Honestly, the easiest way is just to reach out to our team or to just search us up online. If you honestly just go DreamVC online, Dream Space VC, or if you want to go to our website, it's dream-vc.com. You'll see that we do a lot of work in what we consider ecosystem building, mapping out what's currently going on in the continent, mapping out the common stereotypes people have and addressing them, creating a resource bank of free resources that investors can find, like term sheet templates, governance standard templates, biggest list in the world of African-focused podcasts and startup-focused events, which definitely gives me a big reason to be on here as well. I think this podcast will eventually mirage its way onto that list as well. A lot of these kind of things are there. I think it's the easiest starting point for someone just to get a bit of a feel of, does this sound exciting to them? And then if they join the club, if they start to feel like there's something really big going on here, if they start to see the opportunity that we see, then I think the easiest thing is reach out, not just necessarily to us, but to really any person who's in the wider Dream VC community. We now have hundreds of alumni, and most of them share the same mentality of both building in the investment space, but also building up the investment space as they go along. So see how you can engage, see what your overlap is. You're interested in biotech, collaborate with someone building in biotech. You're interested in deep tech, collaborate with someone in deep tech. Fintech, e-commerce, whatever is your connection. I think it's inevitable that with the current macroeconomic environment, Africa is going to become a success story for the next 50 years that people will be talking about, in the same way as how we're still talking about how India has been a miraculous success story from a technological point of view. And I think missing out on that is really a crime for anyone who's an opportunistic individual. So I'd love to see more people actually collaborating and bringing that international experience to play in a positive way, not just from a financial point of view, but recognizing that in the current African environment, you can have profit and impact without compromising one or the other.
Fantastic. We'll have those links in the show notes. And for our audience, but I'm not the host of the Silicon Valley podcast. I'm an investment banker focused on mergers, acquisition, growth capital. Connect with me on LinkedIn at Sean Flynn, or go to the website, thesiliconvalleypodcast.com, where you can see all our past episodes are archives and what we're working on in the future. And with that, Mark, I want to thank you for taking the time to be on this week's episode of the Silicon Valley Podcast. And let's open it up to our virtual audience for questions.
Absolutely. Thank you, Sean. I mean, it's just really great to see that individuals are interested in learning more about African markets. This keeps us motivated, makes us love our work, and hopefully we'll see a lot more people entering the African investment space, whether by themselves or even via our programs. Okay, I'd love to see if we have any questions in the room.
I will mute myself. Lanny, Varun, feel free to talk. Jason.
Yeah. Earlier in your presentation, which was fascinating, and I thank you very much, you mentioned, I think, in passing, that there's a specialization in different countries. Could you talk a little bit about that?
Yes, absolutely. I think when we come to think about most VC ecosystems around the world, it's not a case where you think that a country has regional clusters in a particular sector. You look at the UK, you look at France, and you could be building something in consumer or in logistics or in e-commerce or in the NFT space or in blockchain in Lyon, just as well as in Nice, just as well as in Paris, just as well in Marseille, right? Being somewhere else in the country doesn't necessarily lock you from that opportunity. But that's largely because the opportunities you have access to are somewhat similar. Of course, you will see some concentration, right? In Boston, you might see a bigger concentration of life sciences and deep tech or biotech as compared to maybe parts of the South in the US. But in African markets, this is especially pronounced because you have a lot of countries where they recognize that the corporate mass, the corporates that are dominating in that economy, are often concentrated in a couple of key sectors. Some sectors that dominate 40, 50% of the GDP. Not leveraging that as a sector advantage is a lost cause, right? So you will, of course, have a couple of startups building in every industry, but in some countries in Africa, you see a huge dominance of a particular sector. A couple of examples come to mind. Right now, we have 7 African unicorns. I mentioned this before. 6 of them came from the financial technology space, and 4 of them came from one market, Nigeria. Now, why is that the case? Well, number one, Nigeria has a population twice the size of Russia in the territory of one state out of the 40 or 50 that exist in Russia today. Very small landmass, 200 million plus people, still a very high fertility rate, 4 to 5 per family. That means that population will likely reach 500 million by about 2050. Imagine a new country with 500 million people. It's about a third of the size of India today, many of whom are now born into the generation of being very technologically enabled. At the same time, a lot of them are very, very entrepreneurial. But what are the dominating sectors? You have oil and gas, you have telecommunications, and you have the banking space. Oil and gas is insecure, dangerous, and at the moment, unfortunately, still in Nigeria, plagued by corruption, infrastructure issues, and a lot of nepotism. Telecommunications is an enormous domain that a lot of people will naturally go in, and that's perfectly fine. What's the third domain? Banking. And banks, of course, will often hire a lot of people, but a lot of these banks have existed essentially in a post-colonial time. Not many of them are naturally innovative. Many of them are first discovering corporate innovation in 2023, 2024. So you have a lot of these banks that are missing out on a huge portion of the population because they just can't move quickly enough. Almost none of these banks are neobanks. Almost none of these banks have a working app, for example. Most of these banks don't make an effort to connect with the rural audience or to connect with people who don't necessarily have a smartphone or to connect to building a great customer experience because they don't have an incentive to do so. Since by nature, they are the natural monopoly. They're the only option, for example, the only big bank in a particular region. Now, what startups are realizing is that actually this unbanked audience in Nigeria has a pretty substantial buying power. And as a country with 200 million people, where you see billions of dollars of cash transactions every single day, as you start to move those billions of dollars into digital payments, whoever is building the rails, the financial rails for that to work, can stand to make a lot of money. So actually, we saw initially a generation of fintechs building to compete with banks, and then a generation of fintechs building to allow other people to build fintechs, and now people building embedded finance into other sectors. So now we see people in import and export industries embedding financial products in what they're actually building. So as you work with big suppliers who are selling, for example, fresh produce or electronics abroad, they might need a credit line, and the current bank is overstretched. So then who provides that? A fintech. So you've seen that concentration in Nigeria. In contrast, somewhere like Morocco, where we have the biggest phosphate producer company in the world, not an industry you would think of as very sexy, but that needs a lot of innovation as it regards to directly working with the ground, working with extraction, working with identifying new deposits. How do you actually innovate in that space? Well, you invest in irrigation, agriculture, and deep tech, for example, for more hardware-based R&D. That's exactly what's happened. Last night, I was at this new university called the UM6P. It's a completely new university. Building didn't even exist 10 years ago. Now it specifically focuses on deep tech innovation. And as a result, this university provides free campus space, free experimentation labs, high-speed internet, international expertise, ideation labs, prototyping facilities, amazing computers, amazing mentorship and advice and acceleration, TTOs, for example, tech transfer offices and more for anybody building in that domain. Of course, there will be people building in fintech as well in Morocco, but anybody who happens to build in deep tech will stand to have a huge advantage over anybody who doesn't have access to that ecosystem. So we're definitely seeing a lot more of this specialization in the sense that some African countries have a particular natural advantage. And as soon as someone is recognizing that this national advantage exists, whether because the government pushes that advantage or because it just happens to be there, then you stand to actually benefit quite a lot from it. I think another good example of this, the last one I'll give, is actually the Kenyan economy. Kenya is on the other part of Africa. It's in the east part of Africa. And it's the country that often used to be the landing spot, the soft landing for both Westerners coming to Africa. You think of tourism in Africa. What do you think of? Safari, savannah. Oh, Kenya. Of course you'd go to Kenya. Then it also happened to be a landing spot for anybody coming to do business from India, from Bangladesh, from Pakistan, because you also think of agriculture and wheat fields and production of raw materials and seeds, where you also think of also Kenya. So it happened to build a bit of a reputation as a soft landing space for expats. And then that in turn allowed expats to bring directly concepts that work perhaps in Asia into the African ecosystem. So you see a lot of innovation that's replicating something that's going on in India, replicating something that's going on in, for example, parts of China or Japan, starting off in Kenya, then spreading across in East Africa. So there's a lot of these regional clusters of innovation that don't prevent, but definitely accelerates key sectors.
Thank you.
Mark, I want to be respectful of your time. Do you have a few minutes or for a question from Varun and Jason?
Fine.
Or
That's
okay.
perfectly fine. We can take any questions. Yeah.
All right, let's have one from Varun, one from Jason, then wrap it up.
Yeah, Mark, amazing. Yeah, I learned a lot. So as I mentioned, I was a practicing U.S. lawyer based in Moscow for 11 years. From 2003 to 2014, took many Russian companies public, represented a lot of foreign investors. And one of the main, issues we had with Russian legal system was the corporate law, right? Would my investment in a Russian company be secure? just from a pure corporate law perspective. And, a lot of times we use foreign Cyprus companies, other BVI companies to invest into Russian assets, and the corporate structure would remain offshore. So what are you seeing in Africa? Like, are people actually using, for example, a Kenyan company or a Moroccan company, or is there some, favorite offshore, like Marshall, Marshall Islands or some other jurisdiction that then invests into a Russian business, into an African business?
I mean, firstly, definitely kudos on spending 10 or 11 years working in the Russian corporate finance space and emerging out smiling, happy, and satisfied with yourself. As I think I joked before we started this, I think you're definitely one in few. There's quite a few Russian lawyers who've gone missing over the years or ended up in weird places. So I think you're in a more dangerous domain than I am, or used to be anyway. So kudos on that. When it comes to the African tech ecosystem or the wide African business space, I think there's a couple of things to understand. Number one is that for the longest time, there wasn't really a go-to tax haven location that worked for everyone. A lot of African countries were very isolated, very nationalistic, especially in the 50s and the 60s when they just gained independence from former colonial powers. They didn't yet have an idea of, let's build a tax haven for a wealthy elite to capitalize on tax advantages. A lot of the companies weren't even paying tax. So why build a tax haven when there's a 0% tax rate, right? Now, that changed over time. And a couple of ecosystems really stepped up to gain the main benefit. The biggest one was Mauritius. Mauritius had the experience of being the hub for investments into the Indian subcontinent. And to a large extent, that got replicated through Indian diaspora in Africa to be a hub for initially the financial services. A lot of the first generation telecoms, first generation banks, first generation investment funds, especially in private equity and impact investing, were based in Mauritius. That was the start. Then Mauritius started to see a bit of competition because you started to see an interest from the Channel Islands, BVI, Cayman Islands, Guernsey, Jersey, starting to see, a lot of people want to invest in Africa from the UK or from the US, and they actually want a jurisdiction that they understand how to work with. Most American investors don't have an experience working in Mauritius. They do have an experience working somewhere a bit closer to home. So suddenly you saw Delaware taking a popular spot. You saw Jersey taking a popular spot for UK-based investments. And actually, if you look at the VC scene today, partially because international investors have played such a big role, either indirectly investing. For a couple of years, there were actually more international investors than African investors in most African countries, but also in actually seeding the funds that invest. About 75% of the LPs in African funds are not African, just by nature. Many African institutions still not getting around to understanding how to invest in VC funds. So most of the institutional capital still foreign. You actually see a lot of them saying, well, we're investing in you, or we're giving you money to build a fund to invest in startups. We only understand how to work with Delaware. Make that work. So as a result, you see hundreds of Nigerian funds, Kenyan funds, South African funds, really being a Delaware fund. Their typical 10 plus 2 year structure. The accountants, the fund admin are familiar guys, former Vauban guys, Carter guys, Assure guys, for example. It's not a different world. It's just that the back office and the fund admin is very foreign, but then the implementation and the operations and the actual investment is very, very local. And that's been the current environment. Now that is changing. So what's really exciting to see is that there's a couple of African countries that have recognized that they have an opportunity to be the next Luxembourg, the next Liechtenstein, the next Singapore in Africa by nature of proximity. The biggest leader in that space is Rwanda. So Rwanda is directly in the center of Africa. Rwanda has a relatively forward-moving, quickly developing economy. Many people are coining it as the Singapore of Africa. They recently passed a visa-free policy. They recognized that it was very difficult to travel between African borders, so they just said that anybody with an African passport can come to do business in Rwanda. No visas required anymore, which is very forward-thinking for any economy. You don't see that even parts of the developing world or developed world. And then beyond all of this, they invested a lot of capital in sending people to Dubai to see how Dubai has built the Dubai International Financial Center. And now what you see is you have a Kigali International Financial Center in Rwanda that is telling people, we're going to pay you higher salaries than you can get in Mauritius, higher salaries than you can get in Jersey. The government is funding all of this so that fund admins move their headquarters to Kigali. And if the fund admins are there, if the expertise is there, then the funds will also follow. And once the funds are coming over there and they start to be based there, it obviously has a trickle-down effect in the economy. The typical joke is that something like the Cayman Islands has 10,000 people and 66,000 companies registered there. So I think Rwanda is definitely seeing that as a nice dream to also attract a lot of people to a country without a very large population.
Wow, that's so great to know all that information. Thank you.
All right, Jason, you want to wrap this up?
Yes, thank you, Mark, very much for all that information. That is a lot. My question, I think you kind of touched base on it. It kind of follows what Varun kind of asked, but I was curious of why some of the other areas besides Wakanda that wants to create a hub or an accelerator or incubator, right? And then just trying to do it, but was not very successful. Is it because the government initiative doesn't have money, or as you had mentioned that a lot of the money is coming from elsewhere? And then is it because in that specific areas, there's no outside or private funds that are coming in?
It's a combination of really all of the above, Jason. So number one, a lot of the international funding that's coming in comes in two forms. It either comes in the form of grants and financial aid, which I personally, as a very private sector forward-thinking guy, I think that grants and financial aid is not how you build an economy. It's how you build dependency on somebody else. What you see in many African countries that haven't adopted tech is that they are net recipients of IMF funding, UN funding, USAID funding every single year. And because they have this funding cushion, they actually haven't moved to innovate as quickly as the countries that haven't benefited from that support. So I think sometimes support in kind or support through training or through capacity building, teach someone to fish rather than give them a fish, typical metaphor kind of idea, is actually more efficient in that sense. That's number one. So sometimes the grant funding hasn't accomplished what it was intended for. That's number one. And number two, I think it's that the funding that is locally based is often not sufficient to actually overcome the challenges of a business environment. So obviously from the VC perspective, I'm a natural optimist. You have to be an optimist when you're investing in crazy businesses that might fail tomorrow, right? But when you think about it from a typical business landscape, realistically, salaries are much lower. So if you are very talented, you're highly competent, and you can get a UK visa or a US visa or a Canadian visa, you have to be a particularly driven kind of individual that wants to live in an environment where there is realistically still a higher potential crime rate. There is realistically the environment where the schools are not going to be as strong, the universities are not going to be as capitalized, your living standards are not going to be as good, and choose not to move to France or Belgium or US, or even more so, choose to move from comfort in New York or Chicago or LA to somewhere like the middle of Africa to build something. You have to, has to take some balls, so to speak, to actually take that decision. And realistically, a lot of people don't currently want to do that. That clash of like what you want to do because you're patriotic or you're a Pan-Africanist or you're someone passionate about development against thinking about your personal needs, against thinking about your kids' needs. Realistically, a lot of people will prioritize the second or the third over the first, right? And that's perfectly fine. I think if everybody was this super, passionate about building, obviously it would move faster, but that's never the case. Most people think about themselves or their immediate surroundings first, and that's fine because initially, that means that a lot of these people move out. But then when they move out, they don't disconnect to the continent. They become part of that 10th biggest country in the world. They become part of that diaspora base. And maybe they won't be the ones that will build, but then their kids will come back. Their kids will bring that expertise. They will bring that Harvard education, that experience of 10 years in Luxottica or anything else. And then they will build an African Luxottica. And I would think that impact is actually just as good. So there is definitely a challenge. The brain drain is preventing some of these ecosystems from growing as fast as they can. It's definitely drawing resources away from the ecosystem, and the funding issue is still an issue. But at the same time, I think it's a temporary issue, and the overall picture definitely looks much more positive than negative to me. So I don't see it as impossible that, 10 years down the line, we'll be talking about countries like Burkina Faso and Somalia and, Somaliland, for example, building innovation hubs. It's not impossible. It really just takes that initial wave of people leaving, people coming back, and then private and public sector collaboration to make that happen.
Awesome. Thank you for that, Mark. I really, really appreciate it. That's a lot of information. Thank you.
Well, let's give Mark a round of applause, everyone.